This is basically the radar screen from last week. We had some pretty decent trades, uh, and one of the things I would like to suggest to most of you, because some of you guys have been sending me their spreadsheets with the trades that they have taken, and there is a couple of observation I will be discussing in the mentoring room tomorrow. But one of the things I would like to stress upon you is try to stay with the trade when you have something like a structural point and a significant and an entry point are taken in the same time. These would be trades that if you would take them and just stay with them, at least to go for the big moves. I mean, these would be the ones that will give you a decent move, and if you're able to stay with those, then probably you'll be actually enhancing the results. Getting into the trades in and out too much usually is one of the things that eats up the profitability or the gain. So having said that, let's get started, and we will be discussing the trades, as I said, on the spreadsheets this week. So as we always do, we start looking at our indices, and this was the general out plan from last week. We were basically looking to go long the US dollar. We were slightly bearish for the euro, the Aussie, and the Swiss, and the British pound. I mean, these were primarily the ones we were looking at shorting, and they have evolved. We had one additional surprise, which was the weakness that took place on the yen on Friday, but we will discuss this later. Anyway, to start with our plan, this is the dollar index. As you can see, this was our buying point at 79.18. We had the push, which, as we have discussed from before, that was a short covering coming above the 79.18. It took us to the next level, which is the 80.35. That is the second structure point. And as you can see that we did try to break above that point. We made a high of 80.09 and we pulled back at 80.25. So we did not react too much back or far away from the 80.03. And so this is a close that would indicate the continuity to the upside. And if we look at the weekly chart for the US dollar, you can see that we only had kind of a 2 weeks or 2 strong weeks in the short covering. So we should be looking for an additional 1 or 2 more weeks, probably to take us back on the way to the 81.07. So we should be looking for the dollar to continue higher, and of course a trade above the 80.03. I'm not sure the 80.03 is really the I think it's 80.04. I think this is the one. So actually this is a pretty good close, and we should be looking for the dollar to continue higher. This is a pretty good close, and the dollar is strong, and we will look for buying the dollar this week. The next currency that we'll be looking at, which is actually is the Australian dollar, and this, as we have been discussing, it has been pretty much moving sideways. There is no fundamental reason behind the Australian dollar to go higher. They are actually talking in Australia. The Royal Bank of Australia is actually considering cutting of interest rate. We're having the situation with China, that China might be slowing down, and that is China's biggest trading partner. And as you can see, this close over here, this is a pretty negative close. This is a big turnaround on Friday, and on a weekly chart you can see that it is beginning now. We should be looking for the Aussie to continue lower. So if we go back to our the dollar, we will be looking at buying the dollar, as I said, this week, and the Aussie this week is going to be on the short side. We'll be looking at shorting, but this time it's going to be a double. It is quite short, and we'll be looking at shorting the Australian dollar. The next one is the euro, which is again the big and as you can see, we had the short covering coming in when we started back from the 123. It took us all the way up to the 131, and now we had this 2 weeks pullback. We were considering, when we were looking at the daily chart, that the possibility that this might be a gift. But what's happening right now is we have been failing over here, and we are sitting at the 128.53. We have a normal close. The dollar is strengthening. We're having strength in the dollar. We're having the stock market in a way holding. So the entry in the euro would be quite easy for us on a trade below the 128.53. We should be looking at shorting the euro, and of course the trend is still to the downside. Everything is to the downside, so a break below the 128.53 will be a sell signal. The Swiss franc, this is actually, if you look at the last 3 days, you can pretty much see that the Swiss franc, if you look at the image of the Swiss franc and you look at the image of the euro, they are pretty much moving in tandem, 1-to-1. They are pretty much alike. So if you're getting weakness in the euro, you can actually go and look at the Swiss pairs, look at the pound Swiss, look at the dollar Swiss, look at the Swiss pairs to actually be shorting the Swiss, simply because it is moving very much in tandem. It's having a very strong correlation, a positive correlation with the euro. So the Swiss is actually, when you look at the daily chart of the Swiss index, it's actually much weaker than the euro, because it has triggered a sell signal over here. I mean, we already here have our sell signal right there, and it has been triggered. The euro, we don't have yet the sell signal. In the euro, what we have is a pullback or a gift in a short covering rally. So the sell signal in the euro will be triggered below the 128.53, while in the Swiss franc we have already triggered the sell signal. But we have the same situation that you have here. We got 3 days pretty much having the same lows, the same thing as the in the euro. We want to make sure that they break through these lows. A break below these lows, this lows will be our sell in the Swiss. So the Swiss also will be on. We're getting pretty much the same setup as of last week. So the Swiss is also a short. So we are looking at buying the US dollar, we're looking at selling the Australian dollar. The biggest short will be in the Australian dollar, then the Swiss franc, and then the euro would be okay. The next one we're going to look at is the British pound. And the British pound, as we have been discussing for a very long time, is still in a bear market. You can see the sideways pattern that we have been going through in the British pound since 2009. The major trend is to the downside. We have been in this, if you want to call it, this kind of triangle all the way since 2009. It is narrowing, it's contracting, and it is looking now to start the next leg to the downside. This thing has been oscillating between those, in this narrowing, contracting. It hasn't given us a definitive move, or actually I think it's actually more bearish now than it was before, because the structure point we had, which is the 162.63 right there, that's the one I have this rectangle at. We did actually break it over here. We broke above it once, twice, several times, and then we resolved ourselves to the downside. This is quite a serious sell signal, and we should be looking for taking the pound to the downside. So the two big sell signals that we have this week, one is in the Australian dollar and the other is in the British pound. Last but not least, we're going to look at the Japanese yen. And the yen too is technically and fundamentally, it is in a bull market. It is in a very strong currency, but it is giving us it is in this equilibrium mindset. There is no reason for this thing to continue higher, and they are now beginning to roll over, or to reconsider or reevaluate whether to remain bullish or to change their bias and to go to the short side. What we have over here is two sell signals. A trade below the 129.12, that was one sell signal. That could be one turtle soup, if you will. And then the second time when it traded below the 128.61, pushing all the way down, putting in a low of 128.10 and closing at 128.32. This is also a sell signal in the yen. So realistically speaking, we do have a sell signal in pretty much all the currencies. I mean, most of all the currencies are in a sell signal, except for the US dollar, and this is what's kind of scary. I mean, it's just, I mean, if it seems to be too easy when you have the dollar is the only one to be bought, and the Aussie is short, the yen is short, the Swiss, the euro, the pound, all of them is short. So the easy trade will be actually going long the dollar, short the Aussie dollar, short the dollars, long the dollar Swiss, long the dollar yen, short the euro dollar, and short the pound dollar. And even the Canadian, if you look at the CAD, has actually triggered for us a sell signal by coming and trading below the 101.55. This is now another big sell signal in the CAD. So what we're having is pretty much sell signal across the board, sell signal across the board in all of the currencies, and they're all pretty much prime sell signal. But the weakest currencies that we can see big sell signals on are the Aussie dollar, the British pound, and the Swiss franc. We're going to look at be buying the US dollar, and we're going to maybe we can do something with the Euro CAD or the pound CAD and the pound Aussie. So we might be looking at taking the Aussie short against the, or going long the pound Aussie, going long the Euro Aussie, looking at going long the Euro CAD, going long the pound CAD. So basically we'll be focusing on selling the Aussie, selling the Canadian, and we're going to see how the yen is playing in this sequence. Okay, so let me save the recording, and if anybody has